What if I told you there's a way to grow small accounts easier than trading? It's a little bit harder than investing, but I make 1 to 400% on these leveraged ETFs when the opportunity comes. So here's a few of these leveraged ETFs that I actually made returns on. I made returns on AMDL, I made returns on TSLL, and I made returns on BABX. These are all tickers that I've done this strategy on that I'm going to show you how to pick up on. Now, I'm not going to discuss exactly how I read a chart. That's sort of up to you. I look at volume, I look at the chart's structure, I look at all types of things. However, I'm going to discuss the strategy. You should only do this on blue chip companies. If a ticker like AMD is selling off hard, it could be seen to investors as a buying opportunity at the right time. Now, because it's a leveraged ETF, you're exposed to both 2 times the upside and 2 times the downside. So I suggest you take an investor's approach and reoccurringly invest into this ETF. I don't suggest you try and call a bottom or call a top. I suggest you accumulate your money when the opportunity is present and go from there. For example, I knew TSLL was a buy when it was in the $8 range, and I was going to buy it continuously all the way to 16, which is what I did. Now I'm trying to hold it till about 24, 25, and I'm going to sell and make about 230% or so. And same thing with AMDL. I think I made about 300 to 400%. I was getting it near the lows, accumulating, taking the investor style approach, sold it near 12, 14. I think I got out in that range because I used the wheel strategy to actually accumulate and get out of my position, which is a deeper strategy that I'll explain in another video that's very good as well. Basically, you find a blue chip ticker that's potentially on discount, and you need confidence and a little bit of experience. This is right in between investing and trading. Trading is super hard, investing is super easy. This is right in between. Then you have to take an investor's approach in a long-term style trade. It requires precision dip buying, aka spotting when the value is there, and you should continuously add, because remember, you're reoccurring so you can get a giant payday at the top. That's the whole point of this. Okay? This is easier than traditional trading because you're taking the investor's approach. You're just taking it into a leveraged ETF. So as long as you have that mentality and you know what you're doing, you're laddering in properly, you should be totally fine. Now, you can modify the strategy with things like the wheel strategy, which is what I do, how I'm offloading calls, or I'm selling calls at the top here in BABX. And so this is a cheat code for small accounts who understand a little bit about trading and understand investing and reoccurring investing. I mean, truly, you can take your account from nothing to something huge just because you got a few bottoms on some great companies. I mean, who wouldn't want to own NVIDIA? Who wouldn't want to own AMD, Walmart, things like this? Also, what I'm going to tell you is you should keep an eye out for blue chip tickers when the ETFs are being created. So for example, if a stock is selling off, like right now, Adobe and MSTR, those are kind of catching my attention, but not really. Actually, I don't like the top on MSTR. But Adobe's selling off a bit, and I think, if I'm not wrong, Adobe just had a 2x leveraged ETF opened a few months ago. I think UNH did as well. Now, that doesn't mean, that's not like an indicator for, okay, this is about to start going up. There will be a lot of volume that comes in when you see the accumulation happening. This also is a helpful sign to say, okay, well, this is a potential bottom or buying opportunity. And basically, you use that to, make your decision. So this is the whiteboard without me standing in front of it, if you want to take a screenshot or something. And if you learned something from this video, I hope that you like and subscribe. So thank you.